Welcome to the Amazing Authorities Podcast, where game changers, visionaries, and category leaders share how they built their brands, platforms, and global influence. Your host is Mitch Carson, international speaker, media strategist, and creator of the Instant Authority System. If you're ready to learn from those who've done it and want to become the go-to expert in your space, you're in the right place.
AI is a tool. And Alexander, welcome to the show because you are going to share with us. You've got two tools to share about today, but let's start with one that has changed the landscape of investing and doing it with precision. I like accuracy with facts because my background as a journalist, where I was formally trained. Let's look at the evidence. Let's look at the facts. Fact check when you cite sources. Tell us about the environment you've created for investors today.
Happy to be here, Mitch. Thanks for having me on. I believe you're talking about diversification.com or PortfolioPilot.
Well, why don't you share one at a time, and I'm going to give you access to both because they're both fascinating.
So I think the number one most interesting thing for us is PortfolioPilot. We've basically built a personal AI financial advisor for Alexander Harmsen, for me.
Okay.
And it just so happens, that there's 30,000 other people that seem to like it as well. And we've turned it into a business and raised a couple $1 million. And, it's taking off in a way that we never expected. But at the end of the day, I wasn't comfortable paying 1% to some human financial advisor. I couldn't get over the fact that there was just conflicts of interest all over the place. And, the 1% could have gone to much better use. And I felt like the advice that I was getting wasn't very personalized. And it felt so natural that you could use modern AI and portfolio management tools from sort of the Wall Street hedge fund world, give it some assumptions and settings, and then I don't know if we're quite ready for AI to manage our money for us, but the idea that you could attach it to your personal life, it can look through thousands or tens of thousands of potential changes, and then come up with a menu of different optimization suggestions for you. I think people are open to that. That felt natural to me. And, as markets change, I have like 8, 9 different accounts across, crypto and 401ks and IRAs and bank accounts and real estate and stock options and startup equity. And I mean, the chance that I'm not doing everything optimally is pretty high. And so for someone or something to proactively scan all of that and come up with some optimization opportunities for me made a lot of sense, as long as I could still, push the big red button. And
so it's a tool. It's a tool. It's not a command. It's advisory, exactly, but not transactional for you.
Yeah. I mean, at some point we realized that we're actually giving financial advice. Right. And so if we're talking about human financial advisors, they are both giving financial advice and managing your money. Right. Very often the conversation goes something like, hey, I'm the expert. Give your money to me. It's going to be in good hands, and then we'll see you in retirement. For us, we're assuming that we're dealing with smart people that are self-actualized. And we say, we'll give you advice. We'll explain the rationale behind it. We'll try to make it as simple as possible. Ultimately, you decide whether you want to take that or not. And we'll remove the human bias from it. We'll try to eliminate conflicts of interest. We also needed to get the same registration with the SEC, so our system is actually a registered investment advisor with the SEC. And we give fiduciary investment advice to individuals. And so there's something really interesting about that and all the auditing systems we built, to be able to just enable that.
Well, let me ask a couple questions, if I may, because you're speaking to a former, long time ago, Merrill Lynch and Pierce, Fenner and Smith. It was a long-winded response. Stockbroker. financial advisor. So I was Series 7 licensed, had all the licenses, 63, sold life insurance, all of that. As a person who dispensed advice based on the input I received daily on the Squawk Box, I sold in Los Angeles, where I'm from.
Yep.
And then, but here's the interesting part. And this is where you've come in very well with your tool. Hence the reason I invited you to come to the show, because I can speak from a lot of experience, because this was my past life doing this, selling what I was told to sell. See, here's what people don't know behind the scenes, except when it becomes revealed to the public. And ultimately why I left the business, because it went against my ethics and my moral compass to push investments on people that weren't suitable. And it's in violation. You're going to appreciate what I'm sharing. And this was a long time ago. This was the 80s, late 80s, when I was a stockbroker, and then went to Oppenheimer and Company after I left Merrill. And you're told to sell these securities because there's a higher commission and the resident manager of the office makes more commission based on these proprietary products of investment products. They could be REITs, the real estate investment trusts. They could unit investment trusts. They can be, stocks that they're underwriting, securities that are underwritten or bonds that are underwritten in-house. Push these, you'll get a spiff. And that's not good advice for the consumer.
Horrible. It's so scary,
the truth,
honestly, to hear these. We've heard so many horror stories, and I guess, I assume it's gotten better over the years, but I have very little evidence of that. And, we actually, part of our website, we allow people to just submit financial advisor horror stories.
Well, I just gave you one. Yeah.
I kept hearing these on more and more conversations and user interviews, and they say, I can't believe I found PortfolioPilot because you'll never guess what my human financial advisor said to me. And it comes in all formats, right? There's just straight up conflicts of interest, cross-selling, promoting certain products, not telling you about a potential other alternative because they have a deal with
churn and burn, which was a
behind the scene. There's churning in accounts, right? Trading a little bit more frequently than they should because, well, they make money on every trade. Of
course.
Or, they have a partnership. But it's also, I was talking to this lady a couple weeks ago, and she said she was getting more and more confidence doing it herself. She had about $600,000 with this financial advisor, and she was taking out $10K at a time, moving it into her own self-directed investing account. And so every couple months she would move 10K, just okay, slowly over the next, 5 years, I'm going to take it all out. And I'm going to be ready to truly own my future, stop paying this 1% fee. And she said after about 8 months of this, her financial advisor locked her account and said, hey, I'm doing this for your own good. Just so you know, this pattern's starting to look like money laundering, and there's all kinds of shady stuff. I don't want it to get flagged. And so I'm going to pause all, transfers out from your account for the next year, just for your own good. I don't want this to sort of look suspicious anywhere.
He doesn't have the power to do that. That's illegal.
It was honestly, it's just one of so many stories I've heard. And probably, it's all technically legal. And he'd said this to her in a phone conversation and sent a follow-up email saying hey, this, might be seen by some authorities as this. And then
what an allegation.
You have the choice to do this, yes or no. But, our suggestion is this. I mean, this, right? There's so many ways to do it compliantly, but users aren't fully fully written into what every single word means, and, different hedge clauses. And
wow.
Ultimately, we're trying to put the people back into the hands of individuals and just make sure, we want people to have just a little bit more money, by the time they retire. We want to help control fear and greed for people. We want them to feel a little bit more confident. And, ideally our whole business model, is much more aligned than this sort of traditional financial advisor. I think you also have sort of like on the other extreme, you have a lot of millennials these days that say like, I just don't want to talk to a human, right? Like I don't want to pick up the phone. I don't want to schedule a Zoom call. I don't want to walk into a branch. The idea that I can sort of just tinker with it on my own and get some feedback and read some articles or get some questions answered. I think that there's like a whole new generation
You're right.
where this sort of traditional human advisor model just doesn't work because it's not culturally aligned. And so, we're getting a lot of those people as well.
That's fantastic. And tell us about your second product.
Yeah, diversification.com is actually very aligned, but a lot more focused on education than like the actual advisory service. And so we
Okay.
bought this diversification.com brand, I don't know, just about a year ago at this point. And the main idea there was, let's create a free resource that isn't focused on this sort of like CNBC or, Wall Street Journal or, I don't know, Business Insider, like day-to-day news. It feels like a lot of it is simply just, stock market porn. And, here's this earnings report and here's the street reacting to this news. And we thought, like, how do we focus on the things that actually matter longer term? Now, how do we focus on news for longer term investors? And I think a lot of it just doesn't matter. Most longer term investors should be focused a lot more on macro. A lot of people own real estate, right? And so they care a lot more about mortgages and real estate. And so if how do you tell those stories in a more interesting way? How do you create education around building more efficient portfolios or long-term investing or thinking about estate planning or, thinking about the right way to look at insurance. So there's a fair amount of education articles there. There is a diversification score. You can simply just copy and paste your portfolio in and see how diversified you actually are without creating an account or anything like that. We focus on, sectors and thinking about asset classes and macro trends, what's happening globally that might impact long-term investors in particular. And then, that ends up being very complementary to PortfolioPilot. You can basically think about, diversification as sort of this education resource for the kind of long-term investors that might want to use PortfolioPilot as well. Between you and me, diversification basically feeds in. It's like,
of course,
you lead generation for PortfolioPilot. There's a massive SEO effort around diversification.com. We're starting to do a lot of collaborations as well around diversification.com. Nice name, right? There's something credible about that, just at its core. And then I think that there's a lot of the people, if we think about the people that have investment accounts just across America, I think realistically 10% of them, maybe 20% don't want anything to do with investing at all. It's just like, I have an investing account because I have a 401k that some company set up for me once upon a time, and like just want to give it away to someone else, and I'll see you in retirement and just make sure I don't run out of money at some point in my life. And then I think there's 2% that want to, a big part of their social life and their personal, professional life is investing. They're traders and it's fun. And, it's a big part of what they focus on day to day. And then I think there's sort of like the 78% in between that want to be somewhat involved in their own finances and investing. And they're mostly long-term investors. And those 78% of people, I think, have very few tools or educational material. Most of it, I think, is focused on the traders, on the active investors. And, a lot of that world feels a little bit too complex. It feels like, either have to commit to it fully or stand on the sidelines or just look like an idiot, pretend I know what I'm doing.
So let me jump in here for a second so we can go back and forth. What else are you looking at in order to expand what you're offering? I love the feeder mechanism. You're providing education, which then leads into the platform where you can monetize that free information. And I would imagine that diversification.com, is that a free service or
Yeah,
is it paid?
completely free.
Okay.
Even a big part of PortfolioPilot is completely free.
I saw that.
We have scenario planning and portfolio tracking. We possibly have, one of the best, most comprehensive free portfolio trackers online, mostly because we had to build it to give people financial advice, right?
Right.
We need to import your portfolio. And we thought, there's paid portfolio trackers out there.
Plenty.
But, why not just give it away for free? If people, import their accounts, their net worth, their real estate, their 401ks, 529s, whatever, then we can give them this assessment, tell them what's good, what's bad, and then if they want to actually pay for the advice, the actual financial advice, then they upgrade, become a client of our advisory business, and we'll give them advice in our gold tier.
So what else are you going to add? What do you see in well, it's even crazy. I don't want to ask, what do you see from 5 years from now? That's so far out, it's not even conceivable. What do you see over the next
5 years
year?
from now is like post singularity, right?
But I get it. It's things are moving so quickly. What do you see in the next year that you're going to add on to your services?
I think the framing of positioning ourselves as basically like a replacement for the human financial advisor, I think is like a very useful way to think about it.
I love
a
it.
lot of it comes down to like, if I was to work with a human financial advisor, what benefit do I get from them? Right? So part of it is it's useful to just see everything in the same place, right? Net worth tracking, check. Part of it is, what should I invest in? What's the right asset allocation? How do I think about stocks and bonds and REITs and mutual funds and crypto? And part of it is asset allocation. Part of it is, what do you actually invest in? What do you consider? How does it tie to all of my long-term, short-term goals? We got that covered. Then there's a tax optimization piece to this. And so some people do end of year tax loss harvesting, right? That's a very useful first step. But if you really dig into it, there's natural market volatility throughout the year. There's tons of tax optimization that you can do, month to month. And so the idea of having some ongoing monitoring service, we built that already. Then there's like one of the things that we realized a year ago, a lot of people go to their financial advisor basically just for reassurance, am I still on track for retirement? Am I going to be able to make it? These days people are living longer. Retirement could actually take 30 or 40 years. And so is my money going to last all the way through retirement? And so the idea of modeling out life events and assumptions and ongoing expenses, and what if I have to take care of my mom, or what if we downgrade our house or pay for tuition? Like the idea of modeling those things out, we built that. Part of it is in estate planning, right? Did you know there's a difference between a last will and testament and a living will? That's a surprising thing to most people. And, at some point your financial advisor calls that out for you. It's like, hey, I have, the last will and testament, but we should think about a healthcare directive or life
Power
insurance.
of attorney.
Power of attorney, guardianship for your kids, right?
DNRs, all of these things.
Even just having a checklist, like it doesn't take that much, a couple educational materials, a checklist, reminders to just check on that. Have you set up beneficiaries in all of your different investing accounts? Things like that, super boring, annoying, but you expect that your advisor, reminds you and, bugs you about those things once in a while. So we set up reminders for that and, the ability to sort of run through that. And then sometimes it's simple questions, right? Can I buy this? Is this a good idea? And so there's this AI assistant in the product that can answer basic questions like that. But sometimes it's it's stupid questions of like, okay, what is a Sharpe ratio? And I don't understand this whole idea around portfolio efficiency. For the same level of risk, I can have a higher expected return, if I diversify in a smart way. And, is this worth paying attention for me and my situation? What if I get divorced? Some of these things, you
Boy,
only want to ask it once, but it's like important to know, the impact of that. And so the idea that we're like systematically going through and dismantling the human financial advisor and trying to break down. And then a lot of this just comes down to trust, right? So if you ask, what isn't there yet now, or what are we improving that we can make better over the course of the next year? A lot of it, I think, is about making it simpler to use, making it even more personalized, right? Reaching you exactly where you are right now, and then increasing trust. And the more we can do to increase the trust and just be that like core trusted financial advisor, the more people sign up, the better the business do, the more, the longer they hang out, the more likely they are to recommend it to friends.
let me just ask an important question. Tell me who you've helped. Give me a story of somebody who was in bad shape and where they are today. Let's say before and after using your tools.
We talk a little bit about
You can change the name to protect the innocent, Alexander.
yeah, imagine. So there was a guy a couple of years ago that we spoke to sort of very early on in our journey, I don't know, 2 years ago, 2.5 years ago. And he was using a beta version of our product and imported his net worth. It was very simple. It was, something like 40% real estate, 20% like 401k, was sort of like S&P 500, something like this, and 40% Tesla.
Tesla stock?
Tesla stock.
Wow.
And I forget how much it was, but it was like, we're talking like $400,000 or $500,000 total net worth, something like this, $100,000, $200,000 of Tesla stock, something like this, right? And our system told him like, look, you should sell like 80% of your Tesla position. There's so much idiosyncratic risk here. Your holdings concentration. There's so much risk holding an individual stock. And I remember him clicking the button saying, ignore this recommendation, and he told me, this is bad advice, give me something else. And like, it felt to us, I think if you ask most experts, professionals in the space, that is objectively good advice.
It's hedging yourself against the downside. It's hedge. You hedge.
We asked them, right? Why do you think this is bad advice? What are we not capturing here? Because clearly there's a difference between objectively good advice and advice that people will actually act on, right? And so
hold on one second now, because I have an investment background. I want to test your system with this. Did the system, your AI advisory, did it come up with buy puts to cover yourself or covered calls to cover yourself? Was that availed to him in the advice? Something like, these are advanced questions. Most consumers won't know what I'm asking, but it's in short, what this means, and it hasn't changed much, is it's a conservative strategy to protect what you've invested in, is what I was saying.
Yeah. So there's tons of different ways to like resolve this issue that he has, right?
Right.
One of them, sure, derivatives and options and thinking about hedging and covered calls and whatnot. And so that sort of stuff comes up when we deal with that in the product now.
Okay.
Right?
So it does come up. Yeah. All right.
Part of it could be, selling a little bit and moving into different asset classes, right? Thinking about commodities or real estate, or thinking about inflation-linked bonds, or thinking about just diversifying across a couple large cap, large cap tech companies. Even that, is probably better for the,
even
building an
cash
efficient
is okay,
and downside protection. And so I mean, just digging into the psychology with him, or like, why did he think it was a bad choice? At first, it came down to like, look, I bought it a long time ago. It's just grown a lot. And this is sort of like 2021, 2022, right? And so things hadn't quite crashed yet. And he thought he was a genius for, holding for such a long period of time. I've held it for 10 years. If I hold it for 11 years, probably it's just going to keep going up.
Doesn't work
And
that way.
so he was worried about the taxes. And that
Makes
was
sense.
actually a very smart thing that we said, like, look, if you're telling me to sell something, how can I trust you if you're not taking account my tax situation,
Right.
the cost basis, the unrealized gains that I'm now going to realize and pay taxes on? And so, version 2 included the taxes, and we came back to him and said, like, okay, we're not just going to tell you to sell 80%. We're actually going to tell you to sell, 30%. And these are the lots that you should sell to minimize your tax impact. But still, we think it's a good idea to diversify a little bit from here. And he still clicked, bad advice.
Okay.
And so we went back to the drawing board, tried to figure out what are we missing from this guy. And he said, well, I'm not going to sit on cash. I'm 35 years old. I have a great tech job. I need something else to invest in. So we can't just give someone a sell recommendation without giving them a buy recommendation as well, right? So there's sort of like a second half to each recommendation that we give to people. And so we needed to take that into account. And so like if I buy Microsoft, it kind of feels like I have the same exposure. So I'm paying a bunch of taxes for basically the same exposure. Maybe it's a little bit more diversifying, but is that worth it? Yes or no? You need to give me something else. If you tell me, if I need to do 40 hours of research, to figure out what other stock I'm going to invest in and then end up with another large cap tech stock, wasted time, wasted tax dollars. I might as well stick with Tesla. And then even he thought he had some insider knowledge because his uncle worked at Tesla, and that factors in, that ended up factoring into his decision. And so like we gave him a whole menu of different recommendations. It turns out that, part of it just came down to justifications. Part of it was tying it to his long-term goals, really understanding that he's comfortable putting it into another company or like something much riskier. And so what he ended up doing was selling 5% of his Tesla position, selling the specific lot that he bought only 3 years ago, not 10 years ago, because the taxes
So his tax
were way
basis was less. Yes.
And then buying this like very low cost commodities index fund. That was kind of interesting. He didn't own any commodities, high expected return, very diversified against the, his real estate exposure and his, the rest of his Tesla position. It felt like he could do that, in a given day and not feel bad about it. He finally admitted he was actually quite nervous about holding this much in a single stock. And, obviously, I think partly we were just lucky that the market tanked, the next year, and he came back to us and said, thank God, I should have taken more of your advice. And, this is not really, it's hard to know. I mean, it could have gone the other way too, right? We could have,
Of course.
the market could have continued for another year. He could have come back and said, I can't believe you convinced me.
Can
to
you
diversify a
imagine
little
the
bit."
fallout, Alexander? Could you imagine the fallout had he sold and the 80% of the stock per your recommendation, and then it doubled? Oh my God, you would have been public enemy number one.
It's so there's, at the end of the day, so much of it comes down to like trying to meet people where they are and then nudging them in the right direction, right? If we tell people, look, Mitch, you are wrong, fundamentally wrong. You gotta adopt, what we consider to be the perfect portfolio, and this is the ideal asset allocation. I think you're absolutely right? Like you would end up being wrong a lot of the time, and people would hold you accountable, and they would say this AI system is not worth a damn. But I think the way we've done it now, sort of like trying to nudge people in the right direction. We have this idea of the portfolio score, right? And so whether something is good advice or not is a lot determined by this idea of the portfolio score, where we're trying to meet you where you are, your preferences, your risk match. Part of it comes down to building a really efficient portfolio. And so thinking about risk adjusted returns in the right way, at your level of risk, trying to squeeze out as much expected return as possible, and then focusing on downside protection. Much more than just, do I have sector or holdings concentration, but thinking about inflation, like if, there's a big surprise in inflation and CPI, how affected is my portfolio? Very important question for people like over the last couple of years, right? If raw material prices like oil spike or drop suddenly, am I going to have a big swing in my portfolio, right? So this idea of like building a macro neutral portfolio is a big part of that. And so we built that in. And so whether we give good or bad advice is a lot determined by like how good your portfolio score is in the product. And that helps us give people a North Star that they can focus on. And, some people come in and the system tells them, Mitch, your portfolio score is really bad, right? And even that, we've had a lot of conversations with people sort of like, how do we soften the blow? How do we help people think about like, that's okay, right? Like at least now. Now let's, incrementally every single month, let's improve your portfolio score by 10 points. Maybe it's just every single paycheck invested in something that improves your portfolio score a few points. And then over the course of the next couple of years, you don't pay that much in taxes, but like you feel confident that it's getting better and better and better. For some people, the benefit that we give isn't even higher expected returns or lower, taxes. It's simply just, I finally have something to focus on, kind of like a credit score, right? It's just like, I put in the time, I make the right moves, and like over time, I just see it getting better. And that's comforting to people.
That's
And so,
fantastic.
if we provide that service, I'm happy to.
Well, that's great. So you have shared a lot, and I believe some of our vocabulary might have gone over the heads of the consumer. And I couldn't help it but talk about, because I did have that background at one time in my life when I was, in the 80s, long time before I think some of the people maybe were even born. Listen to this, but it was great information. I believe, this is just my speculation, being a former investment advisor and a business person, you've got a white label opportunity of that product with different investment houses and or individual brokers or investment advisors. They could put their own brand on it using your engine. And that would be an interesting sell to make to the marketplace. And I'm saying this on record, but I don't even know if you have plans in going that direction or not.
Yeah, it's so part of the story is look, this is like, we think this is so much better than traditional human financial advisors that, people should just use PortfolioPilot, right? The reality is that human financial advisory market is something like $240 billion. It's actually bigger than it's ever been. And it doesn't just disappear overnight. And
No.
so I think the realistic goal here is actually to put a significant amount of pressure on that traditional industry to lower fees, to give up a lot of the stuff that creates those horror stories that we were talking about,
Right.
to give more personalized advice that actually meets people where they are, rather than just, being salespeople that puts you in sort of a standard fund. And then, use AI to, provide sort of always on financial advice instead of just, the quarterly or, in some cases, annual checkup, Mitch, things are going great. And so we're perfectly fine white labeling it, working with financial advisors. And actually right now, 40% of our revenue actually comes B2B. So we have this consumer product, but then also we have these big partnerships that we've set up already. So I'm open to that. It's the same underlying advice engine. You can think about the 30,000 users that we work with right now as basically helping us give very rapid feedback to figure out what people really want, what they react to. How do we give good financial advice? How do we include the psychology? And
No,
then,
it's great.
if we're thinking about, reaching 10 million people, is that, a lot of podcasts that I go on and a lot of meta ads, or is that, eventually a partnership with Fidelity or Robinhood? I mean,
Few
probably,
options. I mean,
probably
there's
to go through some sort of partnership channel and integrate that is like ultimately the more scalable approach. So
right. Alexander, we could go on and on and on. You've been a great guest. Thank you for your time today. Please, listeners, look at the show notes to click on these two great tools, diversification.com and Portfolio Pilot. I love the name. I love the name. It's like, okay, safe Portfolio Pilot that will take you on your investment journey safely with a good captain. The captain is wearing his hat. He hasn't had a drink. He's flying that investment advice very soundly without
Never
much air
sleeps.
turbulence.
Never sleeps, no human bias.
Right, exactly. And that's fantastic. I wish I had had this. My mind was percolating. Well, AI wasn't around when I was an advisor. And I thought, wow, what a great tool. It's like your buddy. It's an investment buddy. My buddy is right
if we
there.
can help financial advisors look like geniuses, I love that too.
I think that's the angle. But Alexander, thank you. I'm going to have you on as a guest again in probably 6 months because I think you're going to have updates.
Would love to be back. I love the conversation. Thanks for letting me talk. Mitch, you have a great day.
Thanks for tuning in to the Amazing Authorities Podcast. If today's episode inspired you, take a moment to subscribe, rate, and leave a review. It helps more experts like you rise to the top. For behind-the-scenes access and free resources to boost your authority, head to MitchCarson.com. Until next time, stay amazing.